Hello, YouTube. I've gone back and looked at more than 150 years of data, or all the way back to the 1800s. And we have a pattern here that tells us that it might be time to buy stocks because every time I'm pointing to right now is where we had a green year. And this is after we had a bearish engulfing candle on the yearly chart. Sorry. So if we look here to the one period where we didn't go higher, we just have to ask ourselves whether or not we have to be receptive to the idea that we could be going higher. Notably, because on the Nasdaq, we still have a head and shoulders pattern over here on the monthly chart. But what I would note is just that there is significant progress being made on the weekly chart and on the daily chart. So in this weekend's video, we're going to talk about whether or not it is time to buy stocks with a little bit more evidence. Let's jump forward here too. This is something I tweeted out. Again, link in the description if you want to follow me. This is going back to January 3rd, where there was a very clear case for 2008 versus 2022. In addition to what we already saw with the S&P 500, here we're just noting that we're looking for a head and shoulders pattern. Let's look for an update here now. So if we go back here to QQQ on our 1 month chart, and we look all the way back to our period here in 2008 that I'm trying to compare to, well, we have a head and shoulders, and we were right at the monthly low, which meant that it looked like we were really close to breaking down. We were within $1 of actually cracking and starting to confirm. But what happened instead? Well, as of right now, we're over the 50 monthly moving average at 273.5, and we're currently here at 282. So the bulls were able to defend this higher low pattern here. And if they're defending the higher low and we have an inside bar and we're over the short-term price, but we're inside of a head and shoulders pattern, what do? That's what we have to ask ourselves. So when the evidence is that it takes a few points to knock us down into bear market territory, or pretty much taking out these lows or blowing them out, that confirms the next leg lower, like we're 2008. But at least for right now, the market is just not really giving us that evidence. From where we are right now at about 280, it would take about 20 points for us to retest 260s and about 20 points for us to go to 300. So I would say that there is currently a 1-for-1 risk reward, but being properly positioned, there are ways for us to maximize our risk reward opportunity because tech is just one sector inside of a big stock market. There are literally thousands of these things. And if we are receptive to the idea of making money where it is easy, not always where it is popular, I think we can really understand that. So that's where we were in January 3rd of this year. Then we look forward to something I tweeted earlier on December 24th. This is the pattern I just talked about, the 12-month bearish engulfing pattern. And this only happened 5 times in 150 years. 3 out of 4 times the following bar was green. Well, as of right now, it's 4 out of 5. So if we look here too, our annual chart or the 12-month chart on a log scale for SPX, and we zoom in nice and close here, this is now going to turn into the box where it's holding. So for me, we're looking at the area at 3250 as if we were to repeat history exactly, but we all know history does not repeat itself, but it often rhymes. So it's close enough for me. And what I'm looking at now is going to be the high here from 2020 or 3760. So that's the high we're looking for. The low we have so far this year is 3794, and it held. So that's a back test and a pass. This is like, let's just forget it's SPX or SPY, and we just look at the candles. The candles tell us what is happening. So as long as these areas are defended and hold and we keep advancing, we've already breached 4,002. So it's now January 21st. And as I was developing my thesis for 2023, I had evidence that if we're going to go bearish, Nasdaq has to break down. It didn't. S&P's into a green year. So when I look back to history, I'm like, well, if 75% of the time and now over 80 currently for this year, what would 2022 and 2023 look like in hindsight? I'm trying to be very receptive to that idea. So if we continue to advance here, I also noted that this is here to January 14th, right around that same time. I'm talking about how gold and Bitcoin are reclaiming either their 2011 or 2018 all-time highs. So we're starting to inflate again, whether you're aware of it or not, in different asset classes. Gold was over 1920 here. Let's look and see where it is now. And we're just going to look fast just to keep this nice and mindful here. 1927. And if you haven't already, I would really appreciate if you could please smash that thumbs up. It's going to go a really long way to supporting me in this channel. Thank you so much for tuning in this weekend. All right. Moving forward here. So at the time, we look here to gold. We were sitting here at 1923. While we're at 1927, pattern is intact. Cool. Moving forward to Bitcoin. Well, this is where like Bitcoin's been getting like pretty spicy. So we have a look here. Let's look at our 1 month chart. Let's go to Bitcoin and we have a look here and we're just like, okay, we're at 23,250. Here we were at 20,887. So we've taken out the 2018 high. Same thing with ETH. So like gold and Bitcoin are going risk on, and they're going risk on like in a serious way. Gold is already at 5% so far this year. Bitcoin is up an incredible 40%. Whoa, how much is ETH up? ETH is up 39%, 40 as well. So this is like really, really notable. For me, I have to be receptive to the idea that maybe the market's not going to go the way everyone's looking, just like in 2021, going into like pretty much 12 months ago when we started the bear downtrend. I started discussing a bear narrative where not a lot of people really wanted to hear about it, let alone being receptive to it. And I kind of got pushed to the side. And when I look at this chart right now, objectively, I see a lot of people focusing, and we're looking here at QQQ or a representation of tech stocks, maybe not the way that you like it. There's XLK, there's NDX, there's all these cool tools. I'm focusing on QQQ here. So when we look back to where the big bad bear started, all the way back to early 2022 and late 2021, this is where I started getting some warning signs. We're going sideways. We were going up. We were starting to go sideways. We're going back below the previous tops. It's holding, but if we lose it, it's going to start cascading lower. Yeah, that's what happened. Kind of a head and shoulders pattern. We start going lower, and every time the bears have defended this downtrend, it starts getting violated or breached, or we poke over it. If you're not sure what those terms mean, we got over the line here. And now as we're getting closer to 2022, sorry, end of 2022, we poke it, but can't really get back above, but we've at least breached it, where before here, it didn't. Just too much resistance. So now, if we look here, a lot of people are focusing on the short-term head and shoulders, and we have to give it some credence, absolutely. But what I'm trying to show here is that this is a small pocket of time versus the larger box or the larger pattern where there's more significance. And right now, we're getting an early signal there might be a trend change. Why? Well, because we broke the downtrend and we closed over it for the first time, going back to the start of the bear market. Second thing I would note is that there is the head and shoulders pattern. Let's make it a little bit more obvious. We look here on our daily chart, 1 day. It's a lot easier to see it here. So here we're looking at our head and shoulders pattern where we have our shoulder, our head and our shoulder. And it's not that this is not valid. S&P broke through that same channel here. S&P had this same pattern here. Again, I tweeted this out. I'm trying to tweet more. If you want to follow me, click on the link in the description or the top comment. But then it invalidated it, where that neckline is now becoming support. We note that here by the pink line on the left-hand side, which is the shoulder. And then we look here like, oh, well, that's like kind of where we bounced. Yeah, that's like kind of where we bounced. So I wouldn't say that the head and shoulders is invalid on QQQ. It's still right here. But there's another pattern I'm looking at here, which is larger. It's called a W or a win. And this one's really powerful. So if we now try to identify the risk reward, when I'm looking here, the risk reward for me is pretty simple. We look at QQQ, and let's actually just zoom out a little bit here to make sure we understand where our targets are. Here, let's snap a horizontal ray so people can actually see it. And again, one more time, if you are enjoying the content, I would really appreciate if you could please smash that thumbs up, and please consider subscribing to the channel if you're enjoying the content. We put in a lot of effort to put these videos out, and your support is always appreciated. All right. Let's grab the horizontal ray. Our upside here would be to roughly 334. Our downside risk is going to be to the lows we already have here at roughly 260. Now let's just calculate the risk reward. If we're right and we break this downtrend end, we go all the way to the top target. We get through all the resistance. Our target would be about 18% higher, 50 points. Call it 50 points. Our downside risk is about 24. Let's even just call it 25. If we even go to the low established on the year, it's 28 points. So if we're right, we make 50. If we're wrong, we lose about 25. Does it really matter whether you love this rally or not? Or when you're right, you want to make 50, and when you're wrong, you want to lose 25. That's like simple math. And if you take that into account, whether or not you fundamentally like this rally, trust me, I have my own reasons why I don't like it too. But fundamentals tell us what go on the watch list, and then technicals tell us when to buy and sell. And the technicals right now are flashing me a big signal they have for a while. I'm trying to pay very close attention to it. So if you understand that the bears might eventually be right, the bulls might eventually be right. But from my perspective, for the head and shoulders, if you want to enter bear, like go ahead and do it. We're right on resistance here. We're back above the 200 weekly, back over the 50 monthly. These are high time frame charts. And the fact we're closing Fridays over them means that they're holding. That is much more significant to me than a daily pattern. But I think a lot of people are focusing on. Hindsight will always be 2020. So with greed coming back in, but it getting temporarily flushed out, I think the market wants to go higher. We look here to what the Fed had to say post all of these comments. This is Lael Brainerd, the second most important person at the Fed. We are now in restrictive territory, probing for sufficiently restrictive. The more data we have, the better we will be able to assess. Fantastic. That's what I want to hear. Looking to the economic data this week as well. She spoke late in the week. What do we have here for this week? Well, we had core PCE out of Canada coming in at negative 0.3. Core retail sales out of the US at negative 1.1. And this seems like a small number, but it's actually quite significant. PPI coming in negative 0.5. Retail sales coming in at negative 1.1. Building permits red. Crude oil down. What else? Sorry, that's red number. Retail sales down. Core retail sales down. Okay. So it kind of seems like we're getting a lot of bad news, or maybe the Fed is over tightening. That was the concern earlier in the week. Lael Brainerd spoke and said we're in restrictive territory. Let's see how far we have to go. For this week, there's not really a lot of focus on the US. We got Christine Lagarde speaking on Monday. Watch for that. Skipping forward here to Wednesday, we got a BOC interest rate decision. And again, because we had those low CPI month over month for Canada, I'll be watching the rate decision here. Bank of Canada conference. Let's see what their trajectory or future, what their projections are. Let's see what it is. Core durable goods, that's important. GDP, this is still an expansive territory at 2.6. Oh, this is like the soft landing everyone's talking about. And I'm not here to debate the merits of the bull or the bear. I'm here to talk about how we can make money. And when we're right, if we can make $50 and when we're wrong, we lose 25, I'll take that trade all day. Whether or not people agree with it or think it's the best one, that's just what I'm watching for. This is the part here where I start to get a little bit more concerned on the data this week. I'm looking forward to Friday or core PCE, which is what the Fed looks at. The Fed looks at core PCE. And the problem with 0.3, I believe, I don't want to do it right now just for time, but a 0.3 month over month implies an expansion, annual growth rate of about I think it's about 4%. And the reason why that's important is because the Fed wants the terminal rate to be sufficiently restrictive, which means over the area of core PCE, which is what they track. So it's nice that CPI is coming down. This is what the Fed tracks, and it'll be a very important data point going into their February 1st meeting. So watch for this one on Friday, pre-market. That's a big one. Second half of the week. Also, we got pretty big earnings coming out this week starting. We got Netflix kicking it off, which we'll talk about in a moment. But here we got Microsoft, Boeing, Tesla, American Airlines, Intel, Visa. Those are all really big companies that I will be paying attention to. Notably, we're going to focus on Netflix versus Microsoft. If we look here at Netflix, we realize that, okay, well, Netflix had 50% buy ratings on the stock. So there's two data points I want to focus on here. The first one's that Netflix had a 50% buy rating, but a price target of 346. Let's look and see what Netflix is trading at today. So Netflix right now is trading at 342. It basically hit its price target and half the people believed it, which means there was a surprise, which for me starts to explain part of the reason why we gap and goad on earnings. So we gapped up and we went higher. Then this is the W pattern I've been talking about. If you look here, we got a dub or the W with a handle turns into a back test and breach of the previous tops. That's classic bullish for me. And this comes back to our emotional roller coaster, which I'm seeing in a lot of stocks like Netflix, like UQQ. Instead of focusing on that, let's just come back here. So Netflix reached its price target. Basically, its high is 344 on Friday. It got there, hit the target. So we're either going to have to see revisions higher or people removing their hold, turning into buys, or their buys getting raised. Because right now the average is 346, which means, okay, target hit, but it held the gap. That's impressive. Let's see if it continues to hold it. If you look forward to Microsoft, the second biggest company in the entire market, out of 29 ratings, there are 26 buys. There is a single sell. And we're expecting a price target here at an average of 281 or 17% upside. That is really interesting. Why? Well, because it's the second biggest stock. Everyone thinks it's a buy, and there's about 17% upside, which means it should go higher after earnings. Earnings are not expected to be a beat. Let me just have a look here. Earnings Whisper was down earlier. Let's see if it's up. It's still down. I think it was expecting $2.25 as the whisper versus 229 as the consensus. which would be a small miss. But Netflix also missed earnings. So what I'm focusing on here is that, what does this stock do as a reaction? I think it's going to be a really big clue for the rest of the trillion-dollar company. Tesla's important too, but let's be honest, it's in the dumps. If it keeps going lower, it's not really going to be we're going to be surprised if it goes up, not if it goes down. Let me just put it that way. Boeing's a great tell. So was Intel. So was Visa. So was American Express. But focusing a little bit more on Microsoft, the reason why this is important is because it should be able to just move higher, melt higher, pump higher. If it goes lower, it means that the people who think this is a strong buy are now getting some kind of indication that maybe we got to shift to hold or to sell. So if we now look here to Microsoft, let's look at MSFT on a 1 week. Interesting. It's not a perfect downtrend, but we got our all-time high. We got the rejection. We got the breach, but not the hold. So that's the breach. We start breaching it again. Now we're basically throttling it. We're throttling that downtrend right here. And what are we forming? Well, it needs to go about $1, $2 more to breach that, which would be our low we established in June. So I'm watching Microsoft closely. I'm not here to talk about whether it's going to beat earnings or what it's going to do. I'm here to watch for the reaction. But if it starts to go higher, well, let's see that same classic W forming where, okay, so how do we get here to 282 as a consensus? Well, we just start completing the pattern. We do a large monthly W. We get back over the 50 weekly and we just grind up. That's the story for me. Is it going to happen? Let's watch earnings this week. And then with the emotional roller coaster, like I think we have to just be mindful of what could potentially happen. So without diving in too much more, thank you so much for watching. I would really appreciate if you could smash that thumbs up. Please consider subscribing to the channel. And if not, I look forward to seeing you on the next video. Thank you so much.